Aloha, how are you? Something going on over here. It's over there, yeah. In the construction site. All right. Welcome back for another video, folks, where I talk about stuff and things, sometimes not in that order. And right now, most important um, thing, at least in terms of the Bitcoin and altcoin market, is the question of whether or not the market is going to dump more or is going to rock and roll to the upside. That's the question on a lot of traders' minds. And normally, where I talk about the trading, I'll tell you that you should look at the VEPs because that is the low time frame information. And I would do a workflow and demonstrate to you. For example, if you join us in our alpha trading live streams, either myself or usually Bilbo will run through the workflow during the live stream and show from time frame to time frame, all the way from high time frame all the way down to low time frames, how we read the information, what we do with the information we read, and we look at the probabilities of the different time frames and the tendencies of the direction. And you can see that usually what we say on the live stream is what happens the vast overwhelming majority of the time. And that's because we don't give you call signals, we give you probabilities. And the probabilities usually play out because that's how probabilities work. They don't always play out, but usually they do. Or rather, they always play out in one way or another. Right? Either they play out in the way that you want, or they play out in the way that you don't want. But even if it plays out in the way that you don't want, if you're a low time frame active trader, it doesn't matter if you lose a 30-second trade or a 1 minute trade and you've lost less than 1%, as long as you're winning the vast overwhelming majority of your trades, like whatever, could be 90%, could be higher, could be anything really, as long as you're winning you know, the vast overwhelming majority, which is in my book anyway, at least one standard deviation of your trades on a normal distribution or a Laplace, either one. If you're not winning 68.3% of your trades while keeping the risk the same on every trade, the risk reward profile basically the same, even as it grows, you keep it proportional so that you're never losing more than X amount of your trading capital, and you're winning more than 90% of your trades, or it could be even 68%, 69% of your trades, you'll be doing fine, right? Like if you lose $1 on a trade, let's say you start with $100, you lose $1 on a trade, and then you win on average, say 68.3% of the time. So out of 100 trades, you would win 68.3 of those trades. So 68 trades, you round down, right? It could be 69 if you round up. It would still be relatively one standard deviation, right? Well, if you lose 31 times and your loss appetite is maximalized at less than 1%, and you win the other 68, 69% of the time, and your reward appetite is even roughly half of what your loss appetite is, right? So let's say your loss appetite is at most, you don't want to lose more than 1%. Normally it's going to be around a half percent, but just for the sake of maths, I get 1% for the sake of easy maths. So at most you're going to lose, worst case scenario, you're going to lose 31, 32 trades in a row right from the go. Okay, and then you're going to make it all back as you win only a 0.5% each time, you're going to make it all back and a little bit of profit at the end of 100 trades. How do I know you're going to make a little profit? Well, because 68.268 basically divided by 2 is 34, which means if you're going to lose 31 to 32 trades, $1 each, and then you're gonna that's $32. You got 68 bucks. Then you're gonna win 68 trades at only 50 cents per profit. Right? That's more than twice. And per profit, meaning including all the fees and everything else. Like net profit. It means that you're going to win back all the amount that you lost over those 34 trades that you win. 68 trades that you win. Okay? You win back all the amount that you lost and a little bit of profit. Right? Because, again, 68 trades times a 0.5%, you're going to win 34%. Now you're going to tell me, hang on, but it doesn't work that way because when you're down to $68, they're winning 34. It takes more than winning back 34 trades to getting it. Yes, but here's the thing. When you actually, in real time, run those trades, right, you will actually probably make, on any given normal day in crypto where there's plenty of volatility, as long as you manage your risk not to lose more than 1%, and you do it with, and you should be far less, you will probably make more than a 0.5%, or I'm sorry, 0.5% in profit on the trades you win. So yes, you will actually make back all the money that you've lost, even though you're starting at a lower number. Because as you grow that number, well, just like it shrank when you were losing a 0.5% each time, that number compounds as you grow it. And as you grow each time with, maybe a little bit more than a 0.5% profit, so your average will be closer to 0.75% profit per trade, right? Could be higher, but let's just say still under 1%. You will be in profit on the 100 trades overall. Now, will that happen every single time? Is it possible that there could be some sets of 100 trades where overall you're down a little bit? In theory, sure, it could happen. Of course it could happen. Even if you win most of your trades. If your losses were even just a little bit more than the 1%, or even if they were just 1%, and you didn't manage to maintain a 0.5% or a little bit more than a 0.5%. And remember, when I say it includes your fees, etc., there are a lot of places where you can trade certain assets at certain times for no fees. And so at any given time, there's an exchange where you can trade for no fees or incredibly low fees, right? That make your trading gains not suffer very high fees, especially in crypto, right? There's a lot of those. Now, do you need to be careful with exchanges? You need to be careful with every exchange, frankly, whether they're regulated or not. Because if they're not regulated, obviously you need to be careful because they're not regulated. Still, they could still have a good reputation, and that's wonderful. But nevertheless, if they're not regulated, you need to be extra careful. And if they are regulated, it doesn't mean that they're not going to be targeted, right? Plenty of regulated exchanges have been targeted. And sometimes, social engineering has managed to steal email addresses or other information about users, tying their email addresses to a specific account, that kind of thing. They may not necessarily have the password. Maybe they do, maybe they don't. And if if you're on an account that's been breached, of course you should be getting your funds out of there and changing your password and possibly even reopening a new account and doing what you can to get that data deleted. But of course, if it's in the hands of nefarious people, yeah, they're not going to delete it. You can have as many services as you want out there. So here's the problem with the whole, well, I'll probably make another video about the problem with those data privacy services. Once your info is out there for anything, it's gone forever. Like, you can't actually get it back, right? So, for example, all the social security numbers were recently stolen, some years ago. In, I think it was the U.S. or in Israel, definitely they had a lot of ID numbers were stolen or whatever. In other countries, like social security numbers, passport numbers, have all been stolen, whatever. That information can never get back in the bottle, even if they manage to scrub it from all the big marketplaces on the dark web where they're for sale. Okay. Even if they manage to scrub it from the public internet where it's no longer viewable easily, right? As long as the people who have a copy of that data still have the copy of that data, it's not private, right? Because it's no longer held by a sort of a so-called neutral, trusted authority, right? Even if you don't trust them or whatever, the fact, they're no longer held by a government. If they're held by private citizens who can, sell them and buy them and trade them at will, then we have a bigger problem, At least if it's a government, there's legal recourse if somebody, God forbid, abuses the information. With private citizens, it's really tough, right? Yes, there's some legal recourse under certain circumstances, but not necessarily. Anyway, didn't want to go wander off into that, but I'm just going to hit you guys back with another video about that at some point in the future. Anyway, for now, keep on trading the VAPs. See you guys. Peace.